Supermicrocomputer stock might be facing headwinds over the last few days, but it's still one of the hottest stocks in 2024. Its stock price is up nearly 180% year to date. So it's understandable some investors are feeling like they missed out on supermicrocomputer stock. If that's you and you feel like you missed out, I've got one AI stock you can buy instead. So I'll share with you what that stock is and why I think it's a buy right now.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
I mentioned already that supermicrocomputer stock is up 180% year to date here in 2024. Of course, I recommended supermicrocomputer stock as a buy in January, and then I recommended investors take profits a couple of weeks ago. So if you followed those recommendations, you would have made a great deal of money on supermicrocomputer stock, which pleases me to be sure. I like when my viewers get to make money from my stock research. So in this video, I'll go through another stock you can buy if you feel like you missed out on this supermicrocomputer wave on the back of rising effectiveness of AI. And that stock is Oracle. That's right. Oracle, in its latest quarter, reported GAAP earnings per share of 85 cents. That was up 16% from the same quarter the prior year. Total revenue was up 7% at $13.3 billion. If you look at those two figures by themselves, nothing extraordinary there, just a solid quarter from Oracle. But when you dig a little bit deeper, you start to see a booming AI business for Oracle. And that comes from, if you look at third quarter, total remaining performance obligations were up 29% to $80 billion. Remember, remaining performance obligations, or RPO, is contracts that a company has signed, but it hasn't yet delivered. Think of it like when you purchase a magazine subscription. Let's say you buy a 1-year magazine subscription and you pay for it all up front, but the company doesn't recognize that revenue. Let's say you purchased it for $100. It doesn't recognize $100 in revenue. It only recognizes the revenue incrementally with each magazine delivered. That's what RPO is for Oracle. It's a contract that it's signed, that the customer agreed to pay for, but Oracle cannot recognize it as revenue until it delivers the service. It's going to deliver the service over time, but it just hasn't delivered it yet. So its contracts are a signal of future revenue. And you could see when remaining performance obligations are rising by 29% and revenue was only up 7%, that's a signal that the upcoming quarters, revenue growth is going to accelerate. So you're going to see revenue growth jump higher over the next few quarters on the back of this rising demand. And management elaborated on where this is coming from. So management continued to say large new cloud infrastructure contracts signed in third quarter drove Oracle's total remaining performance obligations to $80 billion, which is an all-time record. We expect to continue receiving large contracts, reserving cloud infrastructure capacity because the demand for our Gen 2 AI infrastructure substantially exceeds supply. So a lot to unpack there. First, when you look at the fact that RPO jumped 29% when revenue was up only 7%, that's great news by itself. Second, the management team is saying that we continue to expect this kind of increase in RPO. So this RPO backlog is expected to increase going forward. So not only did it already jump, it's expected to continue jumping going forward. And finally, management also saying that demand for their Gen 2 AI right now substantially exceeds supply. So it doesn't just exceed supply, it substantially exceeds supply. And that's always good news for a company because that indicates it has pricing power. If there's customers lining up to buy it, more customers lining up to buy than they have available, they can increase price and still have enough to sell out all of their products. So this is all great news for Oracle, and it indicates that there is an upcoming wave of increase in revenue and profit for Oracle on the back of this increasing demand from artificial intelligence. Already, you can see analysts on Wall Street that are following Oracle stock start to revise upward their expectations for Oracle over the next couple of years. So you could see 90 days ago, analysts on Wall Street were expecting Oracle to deliver $5.07 in earnings per share for 2024. They revised that upward to 555 cents 60 days ago, and then revised it upward again to $5.59 7 days ago. Same story for 2025. 90 days ago, they thought Oracle was going to deliver $5.67 in earnings per share. Then 60 days ago, they revised that upwards to $6.22. Now, I wouldn't be surprised if these forecasts are continued to be revised upwards following Oracle's next investor update. I think the trend for its earnings per share is going to be on an upward trajectory, given all that management said on its latest quarterly update, given demand substantially exceeds supply and their RPO is rising as significantly as it is. So all that looks great for Oracle, and its stock is not all that expensive. It's trading at a forward price to earnings of 19.62. It's significantly cheaper than Supermicro Computer stock, which is trading at a forward price to earnings closer to 30. And Oracle's stock price hasn't had the kind of increase that Supermicro Computer stock has. So it's one of those companies where if you feel like you missed out on Supermicro Computer, and Supermicro Computer already experienced that surge in revenue as a result of AI, while Oracle is on the cusp. It's just now getting that increase in demand on the back of artificial intelligence. So it could have a nice boost here over the next couple of years. And if you look back at the company longer term, its operating profit margin has been healthy. So you look at their operating profit margin, averaged above 36% for the better part of the last decade, dipped down to 28% before jumping back up to 29.5%. I wouldn't be surprised if this goes above 30% again over the next few quarters as these RPOs start turning into revenue and sales and profits for Oracle in the near term. And then if you look at its cash flow from operations to sales, also very strong at or above 30% over the last decade. And given this new demand that's coming in that exceeds supply, given that it can exercise some pricing power here, I wouldn't be surprised if this moves higher, closer to perhaps 40%. It can approach 37, 38% maybe in the next 2 years. I wouldn't be surprised if that happens as well for Oracle. So here's one stock that for investors that feel like they missed out on Supermicro Computer and that it's too late to get into Supermicro Computer, I think Oracle is an excellent AI stock that investors can consider buying today. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.